I'm Luke Searveld. Welcome to another episode of Meet the Gaffer. Today we're going to talk about how you get paid for labor. Now, there's three ways of getting paid. Basically, there's the first way would be cash. And I'd say in the last 28 years or so, I've been paid cash 2 or 3 times. So let's never mind that. All right, next way would be invoicing. Okay. You do the job. Production company says, hey, invoice us for what you did. You send them an invoice and maybe a W-9. And then down the road, they send you a 1099 at the end of the year. And you've got that for your taxes, right? Nothing gets taken out. So what you agreed to work for is what you get on the 1099. Now, if you, in addition, add rentals, you're a gaffer, you've got lights and a truck, that goes the same way. So rental, and then at the end of the year, they either separate it out for labor and rents, or they just put it all in miscellaneous and boom, it's all 1099. So pretty straightforward, right? Okay, the other way of getting paid would be payroll. So I don't know about you, but I get paid these 2 different ways all the time. So at the end of the year, I have a stack of 1099s and a stack of W-2s. I usually have more, I've made more out of the 1099s. So I make sure I pay quarterlies throughout the year just so it's not such a big hit at the end of the year. So 2 ways of getting paid: invoice and payroll. But aren't the jobs kind of the same? Yeah. Often a job I'll do that's invoice is very similar to a job I'll do as payroll. So why is it that a particular producer or production company chooses one or the other? Well, that's an interesting question. And it all comes down to classification. So how you classify someone who works for you is how you determine whether they're going to do it as an invoice or as payroll. So if you're going to 1099 someone, can't spell, they're an independent contractor. If you're going to payroll them, then you're considering them, well, temporary employee. So what's the difference? This is a quandary that many people might have, or many people just go, it is what it is. I'll just go with the flow. Well, I thought it'd be good for us to talk to someone who knows a little bit about payroll. And so we've got Christy Anderson from the Talent Fund in Half Moon Bay, which is just south of San Francisco. And I asked her, a couple of these questions. So, Christy, what does a payroll company do?
As a payroll company, we become the employer of record for labor and cover payroll taxes. Payroll taxes include federal and state withholding, Medicare, SDI, which is California State Disability Insurance, FICA, which is Social Security, unemployment, and we also cover workers' comp.
Okay, so it sounds like the payroll company shoulders a lot of the tax burden and the paperwork in terms of labor, at least, and that's a great thing. That's something that you fill out an I-9 and a W-4, and then at the end of the year, the payroll company, not the producer or a production company, gives you a W-2 for your taxes. And on that, you can see that they've taken out, Fed and state tax. They've taken out, Medicare and SDI, so disability. And they've taken out FICA, so Social Security. And they've taken out unemployment insurance, as well as they've provided workers' comp. Workers' comp insurance, we'll put it that way. Okay, now when I'm paying taxes as a 1099 person, then I'm also paying Fed, state, Medicare, and FICA. So I'm paying, this group. Disability, nobody's taking that out for me here. I have to take that out myself. So I have to get my own disability insurance as a separate item. And then unemployment insurance, well, that's an interesting thing, right? No one's taking it out here. I'm not taking it out. So if I'm not being payrolled and I want to get unemployment, no go. You can't name the names of the people who've been paying you and 1099ing you as the companies that owe you unemployment insurance. No, that's a red flag. The EDD or whatever, they'll show up and they'll be auditing that company because they'll say, hey, someone's saying that they're an employee of yours, and what are they? Independent contractor or an employee? All of a sudden that question gets asked. And then in court, that can get sticky. So they want to know, where are those taxes? Who's paying those? And where that money's not available. So you can only name the companies that are payrolling you if you want to get unemployment. So that's just something to know if you're starting out. Okay, then workers' comp insurance. Well, let's go back to Christy and find out what that's all about.
Workers' comp insurance is a type of insurance that is required by law for all employers. You must have it to cover your employees in case there's an accident on the job. Workers' comp insurance is very different from health insurance or disability. If you're injured on the job, your workers' comp insurance will pay for all your doctor's visits and your emergency room visit if that's necessary. So it doesn't go on your personal health insurance. All workers' comp policies are not the same. You must have the correct class codes on your policy to cover the people you're hiring and the type of job they're performing. So for instance, if you have a talent, they will not be the same class code as a crew member. For example, a gaffer, different class codes. The difference between workers' comp and SDI is that workers' comp will cover medical expenses and temporary disability from an injury on a job. California state disability will cover you if you're injured outside of your work world. If you're an employer that's hired a 1099 worker, many times the producer assumes they don't need to have workers' comp because the person they hired as a 1099 employee has their own policy, which is not always the case. So if there's an injury on the job, the producer is going to be held liable for that.
Okay, good information about workers' comp. If you're being payrolled, you're covered. If you're invoicing, 1099ing, are you covered? I mean, how many crew people do you know have their own workers' comp? Yeah, not that many. But a smart producer who's going the 1099 route is going to have workers' comp, and you can get it in other ways. You can get it as far as your production insurance. You can get it through the state, but the fact remains, are you being covered with the correct codes? That's an important thing. So there are other ways of doing it, but if you don't have workers' comp and someone gets hurt on the job and it gets into a situation where it goes to court or something, now you're opened up not only to fines for misclassifying your workers, but you may be on the hook for that health situation, those costs. And so it's a lot better to have workers' comp figured out ahead of time. All right, so that's workers' comp. And it kind of shows up the fuzziness between these two classifications. And that's what it comes down to. How do you classify the people who work for you? Now, in different parts of the government, there are sort of different criteria for figuring out if you're an independent contractor or an employee. So that's kind of confusing too. So you got the EDD in California and the Department of Labor. They have little different ways of figuring it out. In the comments below, I will put some links and you can check that out yourself. But it's good to have an idea. To me, it's about direction and control. So I think the law tends to lean towards the fact that we're employees. But you know, I'm kind of crazy. I went out and got my own workers' comp just because I know every once in a while I'm working for someone who doesn't have it. And so the reality is you're going to work for people who want you to invoice and people who want you to payroll. And you know, this is probably the safer route, but it also adds to your labor costs as a producer. So you have to weigh that against having the exposure that you have when you work it this way. So let's go back one more time to Christy and ask her what the percentages are for payroll.
As the employer of record, there's certain fees that we have to pass on to the producer above their labor wages. We have Medicare, which is 1.45%, FICA, which is 6.2%, FUTA, which is federal unemployment tax, it's 1.8%, and SUTA, which is state unemployment tax, which is 6.2%. The fees that we pass on to the producer are 15.65% of wages. Then you have workers' comp, which can vary, and then our handling fee on top of all wages and fees is 5%. The benefits for a producer to use a payroll company is we handle all unemployment claims, we handle all of the workers' comp insurance and workers' comp claims, and garnishments of wages are mailed directly to us and they don't have to deal with it.
Okay, there's a lot going on here, and we could discuss this forever, you know, the pros and cons between the two. If you're being payrolled, hey, you know you're covered. If you're being if you're invoicing for 1099, get those coverages that maybe aren't, you know, included. And you know, as a producer, yeah, just know what your exposure is and be ready for what might come down the line. And yeah, as always, thank you for watching, and I'll see you again next time.
When you're filling out a W-4 I-9, employees really need to know what that means. They'll read it and assume that, oh, I can file exempt. But what exempt means is you're not having any federal state withholding taxes taken out of your paycheck. You still have to pay those at the end of the year. It's not a free pass. So if you claim exempt, you have to know that by the end of the year, you're still going to have to pay those withholding taxes. Or if you file too many dependents, you're going to have less taxes taken out. You're still going to have to pay that at the end of the year if you make over a certain amount of money.